Good morning. Welcome to IG's early morning call. It's Thursday, the 22nd of February. Let's take a look at what's coming up in the programme in today's session as we wait the start of today's European trading day ahead. We are witnessing what I think is going to be a positive start to the trading day as we see things develop in the session. So far today, we've got record highs on the DAX, the French CAC 40, and also the Japanese Nikkei 225 as well, as we see markets move higher on the trading day. UK earnings, we've got Lloyds Banking Group and Royce releasing full year reports out today. We've got what looks like a pretty good number for Royce. Not so convinced for Lloyds Banking Group, although not as bad as Hayes, the recruitment company we've seen come through this morning. And late last night, NVIDIA shares jumping to an all-time record high. Chipmaker smashing earnings, sales, and the outlook expectations as well. Let's take a look at volatility as we see the markets move lower in the session in today's trading day. We've got this move at the moment down to 1504, and this indicates to me that we've got money going back into risk assets. That being said, the London FTSE 100 yesterday, a big underperformer on the markets in yesterday's session. We were well off the lows. Much of it was driven by the motor from the banking sector. Today we got Lloyds. Yesterday it was HSBC, and what analysts said was a messy set of earnings. Exposure to China, the company in all sorts of problems out in that direction. But the banking arm here in the UK, not too bad on higher interest rates. Today we got Lloyds Banking Group having come out with numbers, and that not looking quite so bad. I want to show you the 30-minute chart to show you where we are in terms of the close late last night. You can see we are up on the cash session in today's trade on from the close that we saw yesterday. So we are looking for a slightly stronger start, but nothing like the start we're getting on the German markets and the French CAC 40 as well. Look at that. In fact, as we speak, we are hitting new all-time record highs. This market now up at 17,238 for the German DAX. And as we witness on the 24-hour markets on the IG platform, things looking really good as we go into the start of today's session at the top of the hour. Same sort of price action on the French markets, although we are now off the highs. A new record high on the 24-hour markets is 78.73. French CAC 40, as of the close last night, we are ticking slightly higher at 78.57. Let's take a look at what's been happening overnight in the Asia-Pacific markets, with the markets showing a mixed bag. I want to show you, of all of those, I want to show you what's happened on the Japanese markets there, because this is the one to follow. Last year, we saw a 28.7% rise on the Nikkei 225. Since the beginning of this year, we're up 17.85%. We've hit a new all-time record high in the session in today's trade. We saw a new all-time closing high for the first time since 1989 yesterday, and the market's closing out as another new record high. So that's the position we're going at on the moment on the Nikkei 225. Let me just take a look at what's been happening on the US markets. As of the close last night, the US market showing some interesting developments overall. The Dow, the S&P both up. The Nasdaq was down at the close on yesterday's session by a margin of 0.33%. I say some interesting moves because late last night after the close, this index, the Nasdaq, moved higher and in fact closed at the top of the 24-hour market candle. No sellers in the session yesterday, driven by what was an absolutely stunning set of results coming through from the world's largest chip maker, NVIDIA, capitalizing on the opportunities in the AI space. This is the real motor behind what's been happening subsequent to the close last night on the Nasdaq. As of the 24-hour markets today, we're at the highest we've seen since the 16th of Feb, up at 17,766.9 as we speak. S&P 500, which as we know now carries a lot of tech stocks, up on the session in today's trade after what was a 24-hour market boost yesterday. And Wall Street, the Dow Industrials, after yesterday's gains, more gains today. So we're looking for a slightly stronger start when trade gets underway later on in the US markets. Now, let's move on to take a look at what else has been happening as we see things move on the markets today. Surprisingly, we got the dollar basket down. The Fed minutes last night showing that the no rate cut would be coming until there was certain greater confidence that inflation was receding. This is the quote that came through, but broadly speaking, the meeting summary indicated a general sense of optimism that the Fed's policy moves had succeeded in lowering the rate of inflation, which in mid-2022 hit its highest level in more than 40 years. However, officials noted that they wanted to see more evidence before starting to ease policy, while saying that rate hikes are likely over. Members cited the risks of moving too quickly on interest rate cuts. So let's switch on to what's happening on the dollar basket, because I think this is interesting. We are now down below this line that I've drawn here, which goes back to the highs that we had, back in the 23rd of January at 103.39. We're just resting on the 200-day moving average for the dollar basket. Interestingly, despite the fact the Fed remains relatively hawkish, we are expecting an interest rate cut come the month of June this year. And interestingly now, if you take out this tiny green candle we saw here back on Monday this week, it is essentially 7 days of declines that we've got, or certainly 6 days of declines with a little hiatus there in the middle. The way to trade this, of course, is what's happening with euro dollar. There is some economic data out today I'll talk about in just a minute. But broadly speaking, the euro dollar at its highest level we've not seen since the 2nd of February. Let me just take a look as well at what's happening in the Japanese markets, because we've already seen that Nikkei 225 rise to a record high. 83% of economists polled by Reuters believe that the Bank of Japan will pull the plug on 8 years of negative interest rate policy come April this year. They say that that is the point at which they believe things will change. Nearly the same proportion of economists, 76%, also expect the BOJ to scrap the yield control at that meeting. Let's take a look at what's happening with the dollar yen. I'm going to say not much move. If anything, the yen is slightly stronger against that weaker dollar in today's session. This is the dollar moving down. We're still above the 150 level, which is a seminal moment as far as I'm concerned in what's happening with the dollar yen trade. I think the Japanese authorities really want this yen to be a lot stronger than where it is at the moment. This dollar strength has been held onto recently after that strong candle taking it past the 150 back on the 13th of February, Tuesday last week. We've seen pretty much sideways movement for that. Let me just stay on this chart and consider as well, under normal circumstances, when you get some hawkish commentary like that about the possibility about ending interest rates, you ask why this movement is happening at the moment. Well, the Japanese services PMI has come in weaker than expected at 52.5. We've been looking for 53.2. The composite PMI has come through at 50.3, estimates of 51.6. So that is weaker than expected. And I think today as well is going to be interesting across the board insofar as the PMI data is concerned. We've got pretty much the entire Eurozone out with PMI data, Germany, France, Italy, Spain, the big ones. Also here in the UK, later on in the States as well, we get PMI data as well coming through. Let me also take a look as well at what's been happening, or what is likely to happen later on in the States for the jobless claims, expectations of 218,000. Existing home sales forecast to rise by 3% in January, month on month. Now, let's take a look at what's been happening with some of what's been going on in the corporate news headlines across the UK, because we've seen some breaking news coming through in a couple of really interesting areas. One is Lloyds. Lloyds Banking Group. Full year underlying profit up 11% to £7.8 billion. Underlying net interest income up 5% to 13.7. Operating costs up 5% to 9.1 billion. This is up from 8.6 billion. And that is going to send some alarm bells across the waves. Fourth quarter statutory pre-tax profit, 1.78 billion. Now, the estimates have been for 1.73 billion, according to Bloomberg. So this looks pretty good. Lloyds is also taking a £450 million charge amid the UK FCA motor finance review. You remember last week we saw Close Brothers cut its dividend, and the stock was down 12% as a result of that. This is the reaction that Lloyds has taken. I want to show you the share price chart for Lloyds. Yesterday we were down. I think much of the motor behind that was what happened yesterday with HSBC and that messy earnings that the company reported. Lloyds down yesterday at 43.24. If you strip out that £450 million charge that Lloyds is taking now amid the UK motor finance review, I think things are looking pretty good for the company, especially the fact you've got fourth quarter statutory pre-tax profit better off than had been expected. Let's assume this is going to see a beneficial move on yesterday's decline. 43.24, your stock goes underneath the 40 pence level with a view to taking this up. How far it goes remains to be seen, but I suspect this could possibly be one of those stocks that could well react positively to the news out this morning. That's not a recommendation on direction of travel, just my view on having seen the RNS statement this morning. Another RNS statement I saw coming through was Rolls-Royce. Now, this is looking at a stunning set of numbers for the company. Rolls-Royce 2023 full-year results. Underlying profit, operating profit, 1.6 billion. Underlying margin of 10.3%. Record free cash flow of 1.3 billion pounds, driven by operating profit and continued long-term balance sheet growth. The company says it sees 2024 free cash flow of 1.7 billion to 1.9 billion. Estimates are being for 1.37 billion. So that is a lot stronger than had been expecting. Return on capital more than doubled to 11.3%, reflecting improved operating profit. Net debt, 2 billion, down from 3.3 billion. 2024 guidance, continued progress with underlying operating profit between 1.7 and 2 billion and free cash flow between 1.7 and 1.9 billion. All of these numbers are stronger, pretty much stronger than had been expected by both the company and analysts. I want to show you this chart here. That 219% I got here in the blue box for Rolls-Royce was last year's gain on the market. Subsequent to that, we've seen a rise so far this year of 12.93%. And I suspect this could well see some more gains. 329 pence is where this stock will start out trade. Stop loss goes underneath the 320 level. The last time we traded at these levels, all the way back in, what was that, June 2020. But you can see Rolls-Royce had a particularly bad period between 2018, then came COVID, because obviously airlines stopped flying and there was no servicing contract. Things are returning now, and the company is expected to start stronger when trade gets underway later on. I want to stay on the charts. Just want to bring up the next stock chart of Hays. This looks dire, whichever way you cut it. Hays first half, net fees down 11%, temporary fees down 3%, permanent down 15%, operating profit down 38%, pre-tax profit down 41%. It really looks a dire set of numbers. 95.7 is where this stock's going to open. I suspect we could well see some losses at the start today. Stock goes above the 98 level. With a view to taking this down, possibly to this line of support at 91.6. Also watching out for Nestle at the start of today's trade. I want to bring up some details of what that company's been doing. Full-year organic sales missing expectations, rising 7.2%. Analysts had on average expected organic sales growth of 7.4%. So that's a little bit of a downside. Nestle's net profit rising by about 20%, though, to 11.2 billion Swiss francs. The interesting thing about Nestle, if you look at what's been happening here, the companies have been having to talk about all sorts of problems it's got in absorbing some of the cost of inflation. Some of these big supermarkets are refusing to stock some goods that are priced what they consider to be unreasonably, forcing these big food companies to absorb some of the costs. And this has been the net effect, I think, on the markets. Recently, we've seen a recent low at 94.46 for the stock of Nestle. And you can see that's now tipped below this low point we had back on the 25th of February 2021. And in fact, we're now not too far away from levels not seen since March 2020. Been a little bit of a rebound recently, but I can't see anything in these numbers out today which is any sort of celebration in Nestle. Also, Mercedes-Benz, the German car maker, has come with numbers today, reporting an adjusted return on sales in its car division at 12.6% for 2023, in line with its forecast. Group earnings before interest taxes falling to 19.7 billion euros from 20.5 billion this time last year, despite a 2% rise in its revenue. German industrial companies, they're going tough going into the back end of last year. Since then, we've seen a nice, healthy increase in the stock of Merck. Let me just draw you a percentage line to show you 25% gain almost as of the high point in yesterday's session at 68.22, which is where we closed out yesterday's trade. Where we go today depends very much on how much has already been built into these numbers, I think, with this recent stock rise. But for me, one of the big numbers that we've seen come through has been NVIDIA. This stock up 6% in extended trade yesterday as the group smashed earnings, smashed revenues, smashed sales, smashed the outlook expectations. The company's adjusted fourth quarter earnings coming at $5.16 per share, compared with estimates of 4.61. NVIDIA reporting fourth quarter revenue, $22.1 billion, beating estimates of $20.55 billion. Sales growth accelerating at the data center, the segment which comprises cloud and AI services, which is the real jewel in the crown for NVIDIA, growing 400 Yep, 409% up to 18.4 billion, smashing estimates of 16.8 billion. Data center revenue growing close to 280% in the prior quarter. So this company is absolutely performing in every single shape, dimension, universe, you name it. For the current quarter, NVIDIA anticipates revenue growth of 233%. That was ahead of Wall Street expectations, as well of 208% growth. Now, let's take a look at the direction of travel, because it wasn't all positive yesterday in extended trade. If I show you the hour-on-hour travel, you can see that initially the stock fell, but then came this propulsion. It wasn't quite to an all-time record high. It didn't quite beat the intraday record high we saw back on the 12th of February. But oh boy, was it a recovery on from what had been a little bit of a disappointment at the start. Goodness only knows what people have been looking at to lead them into believing this was a disappointing number. When all was said and done, we ended up on the session yesterday. And in fact, overall in yesterday's trade, if you include what happened during the main trading day yesterday, we were up 8% overall. It's an all-session stock. It reacted last night to the news, and indeed we got this stock opening at 9 o'clock this morning. The question remains, how long will NVIDIA be able to sustain this pace of growth? And I think for me, that is what's likely to be the big question mark. Price to perfection and beyond, how much further up will this number go? So that's NVIDIA as at the close last night. We've got Moderna out with numbers, I think, after the close tonight, which we're looking ahead to later on today. Now, let's take a look at what's been happening in the price of oil. This is Brent, 82.56 trading at the moment. We've seen this holding on to recent gains. Yesterday evening, the API produced crude oil stocks information, rising by about 7.2 million barrels, according to the API. That kept a lid on the price yesterday. Gasoline inventories also increasing by around about 400,000 barrels a piece. Let's take a look, if we can, at what's happening with spot gold briefly. That weakness in the dollar we've seen is driving higher prices on a lot of commodities, gold particularly. A little bit of a Mariposa candle, but right at the top, no sellers at the moment at 20.31. So gold recovering on from the recent lows. That's it from me. I'll be looking out the start of the day's trade for the likes of Lloyds, Hayes, and also Rolls-Royce, particularly on the upside. I think possibly this morning, and also Nestle and Mercedes-Benz, a couple of stocks to watch at the start on the continental markets as we see things begin at the top of the hour. What looks like to be new record highs for German DAX French CAC 40, and again here in the London markets after that disappointing drive down yesterday on the FTSE 100 mainly as a result of that news coming through from HSBC. The big question is, can Lloyds reverse some of that with its reaction to earnings out this morning? So we're back at 10:30 for Charting the Markets.